Hey, what up, y'all? It's your boy Degenerate. It's Saturday, May 4th. Today, I want to talk to y'all about support and resistance. In short, it's a predetermined level where buyers and sellers come into the market. And honestly, it's the only areas where I look to trade. I'll hop right into it. Currently, I pulled up the weekly Tesla chart. We're currently looking at between 2014 and 2017. Going into 2014, Tesla was in just a bull run. So around September 23rd, it, levels out around 190. You can see right up here. And that's where sellers came in. Sellers came in there. They took their profit. And you can see that area then became support once that level was broken at multiple times over the next 2 years. That's where sellers ended up coming back into the market, or buyers ended up coming back into the market. That high right there. So it broke past it. And what happened? Sellers came into the market at around 263. That was its top. Where did sellers come into the market the second time? It came around 6 months later. Another almost year after that. And another 9 months after that. And then again, after a fake out breakout in February, before coming back under and then going higher. Does this pattern make sense? Buyers are coming in, they sell, they buy back at this level, they sell up here again, they buy here, you look to sell up there, and it becomes a channel. So if I'm looking to enter into a trade, why would I enter it into it right here and think, oh, my stop loss needs to be down here because that's where the buyers came in, and then I need to take a good risk reward ratio. I'm shooting way up high, like price. If I was entering in a trade right here, FOMOing in, and I'm just trying to stay not stopped out, I'm way past any price discovery on Tesla right now whatsoever. Why would I enter that trade? Compared to, say, if buyers came in here, the next time it retests that area, you could then set your stop loss, say something right there. And then that 3-to-1 risk reward ratio that I aim for now becomes attainable at 246. And I still have room until the top of the channel up here. So I could risk 1% of my account and only size in 1/10 of my account on this trade, or I could size in literally like a 20th of my account if I was still wanting to risk 1% if I entered in like right there. And I would not hit my target from 2015, 2016 until way up here, like 2017. I'm holding on to just 5% of that capital, just locked away, waiting for a trade that may never happen until I get stopped. I would have been stopped out here anyway. And then I just would have been bummed that I held that capital there for like a year and got nothing out of it. Compared to buying at predetermined areas where buyers have came in. And the same thing when it comes to selling, whether it's short selling or whether it's just taking profit. Why would you go ahead and assume that it's going to break out of the range until it does? That doesn't make sense. But if you were to enter into a short position around right here, would I have a loss up here? Would I let it really run this high? Maybe not. That's still like a 10% range. And when you're looking at the bottom, like where are you taking profit at? Again, that's a 3-to-1 right there. you were to go right onto the channel, you know, you would have been stopped out. Sorry. Would you try again? Maybe you would, and maybe you would go ahead and enter in right there. And in that case, you definitely got it at that time. You got a 3.5 risk reward ratio. And then even when you look down here, it invalidated this channel. It came all the way down, but look at where it rebounded at. This level coincides with this level over here, where one, it hiccuped, and then it hiccuped again, and then it kept going. So is that a crazy spot to be buying at right there? No. Is it as convincing as buying right here and right here and right here, where there's already 3 supports or just 3 touches of that line? No, not at all. Would you have entered in that trade? Maybe when you saw it come down here and you saw this close, maybe you think, oh, hey, I'll enter into a trade and have something like this. But otherwise, you know, you're just going to play the channel. I would just play the channel. Rather than entering in at crazy spots anywhere else in the chart, expecting resistance areas where the sellers came in previously to break. Because that's not how I preserve capital. And otherwise, I'm spending capital. When you look at the current Tesla chart, you can see that this level on top of the channel ended up serving as a pretty decent support. And honestly, if you take the support right before it blasted off into the next channel, boom. This now becomes a range where you can size in your bids. And your goal should be up here. If you had at the top of the chart, sorry, you hit it twice. You didn't hit it that 4th time. And you didn't hit that one there, or those 2. But you do see a little bit more price action into these areas. Maybe you would readjust. Again, we're looking at weekly charts. But this should apply whether it's a weekly chart or an hourly chart or like a 5-minute chart. Ranges are still going to be ranges. I can point this out. Let's look at a Bitcoin chart. So I'm going to look at something like an hourly chart and just show y'all what I'm talking about. So I mean, like here currently, the past 2 days, you're looking at areas where buyers have came in. Boom. This 56.70 area. Where if sellers came in? This area right up here, 57.94. So if it goes ahead and touches back here and you have a low time preference trading, if you're not trying to have like a weekly position, you're trying to have like an hourly position, I would look to buy right there below that channel. And I'd probably cut right there, and my target would be up there. And you look at that risk reward ratio, even if you pull it down to the bottom of this range, you're still getting almost a 3-to-1 risk reward ratio right there. And if you want to size in a little bit lower, say you really want to catch the bottom of that wick or the bottom of that wick, then it only goes ahead and gets easier. And here you're risking less than 1%. That's insane. You're risking less. You can size in your whole account, and you're only risking 1% of your account if you're wrong on that. So why would I not do that versus say buying it right here and then hoping that it's gonna break out of this range and all of a sudden have some new price discovery? I have to reach for so much higher of my capital. I'm now up at 6,000. If it does not hit 6,000, If I were to enter in right here, oh well, I just lost. Like, why don't I save that for another day? Save your capital for a better looking trade. You're not limited on options. The market is always going to have options. Look at any market you want. There's a market open right now for you that you can trade on. And if you have to enter in a trade and you're looking at a lower time frame, like perspectives, that's fine. But just have your levels marked out ahead of time of what range you're playing. If you're just not looking at where the buyers and sellers are coming in and looking at more so, oh, Bitcoin jumped $500, I gotta enter in right now, like, whoa, wait, hold up. Don't waste your capital that you worked so hard for. Just going ahead and sizing into something that you didn't really do your research on previously. And, ooh, here's another thing I want to talk about. 6,000 held with Bitcoin for all of last year, really, until November. So because this was support the entire since November, really, what does support now become? It becomes resistance. So if I was in this trade, where would I look to start taking profit at? And that would be where the top of the previous support is. That's at 6,000. So why do I expect if I enter in a trade here that I'm going to go ahead and just FOMO in on something with a stop loss like down here? If like you're doing this, that's a long game. You feel me? Like you could probably get a better price on that. Why would you do that? You know, just some thoughts. I want everyone out there to trade smart. I want everyone out there to manage their risk. I want to see you here as a trader next week and next month. And in 10 years from now, I want you to be retired on some island. Hit me up. Invite me to go drink a bottle of wine or some shit on your yacht that you're retired with. Or, you know, whatever your dreams are. It could be in like a beach in Mexico paying $400 a month for rent. Sign me up for all of that. But the name of the game is staying actually in the game. Not just gambling it all away. Don't be the degenerate. That's my job. And I hope y'all learned something. If you want me to elaborate or you have any comments or any of that, leave it below. I'll get back to you. Thanks for your time. I hope it was beneficial for y'all.